Welcome to Part 4 of PIBA's Retirement Benefits Training for Employers. We will be discussing service purchase in this section. Specifically, we will be going over the service purchase rules, types of service purchase, how a member goes about purchasing service, and how to pay for a service purchase. First, let's go over the rules for purchasing service. Active members of one of PIBA's defined benefit plans may be eligible to purchase additional service credit to include qualified service, up to 5 years of non-qualified service, previously withdrawn service, or the transfer of service from SCRS to PORS. Each type of service credit can be established only once a year. It is important to emphasize that a member must be an active contributing member to purchase service credit. For example, a member on leave without pay would not be eligible to purchase service because the member would not be receiving compensation and contributing to the system and would not be a contributing member. Purchasing non-qualified service, which we will discuss in more detail later in this presentation, requires that a member have 5 years of earned service. All service purchases must be completed before leaving employment, with one exception. If a member terminates employment within 1 year of retirement eligibility, they have an additional 5 business days to purchase any service they would otherwise be eligible to purchase. Members who have qualified service that was covered by another defined benefit plan are not eligible to purchase that service in one of PIBA's defined benefit plans if they would also receive a benefit for the service in the other defined benefit plan. For example, if a member has enough years in the Georgia retirement system to qualify for a future benefit payment, he would need to close that account to purchase that service in SCRS or PORS. By law, a member cannot draw 2 benefits from the same period of time. The only exception to this is the purchase of military service, which will be discussed later in this presentation. Some types of service purchase are considered earned service. In this case, the purchased service counts towards any plan requirements that are based upon earned service, and in some cases, compensation from that service can be used in determining the average final compensation, or AFC, calculation if the earnings are among the member's highest consecutive quarters of earnings. The following types of service would be considered earned: withdrawn earned service, state ORP service, military leave of absence service, such as in the case of a deployment, workers' compensation, and a transfer of earned SCRS service to the PORS system. Other types of qualified and non-qualified service purchases are not considered earned. Service that is eligible to buy but is not considered earned does count toward total service credit requirements for retirement. Additional purchased years of service credit, however, do not count towards age requirements when applicable. For example, if an SCRS member is 59 years old with 21 years of service credit, the member would not be eligible to retire by purchasing 1 year of service credit. If a member is considering making a service purchase for the purposes of retiree health insurance eligibility, he should contact PIBA for more information. When determining how much total service can be purchased for various types of service, including public, educational, and state ORP service, PIBA looks at how much a member earned during the time in question. Using the indexed service credit threshold chart, PIBA determines whether the service eligible for purchase is full or part-time service. The chart shows the federal minimum wage amount multiplied by 80 for each calendar month. If this amount was earned, that month would be considered full-time. If it is less than that amount, the percentage of the shortfall would determine the amount of part-time service available for purchase. This formula can also be applied to purchase part-time service or earned part-time service from before July 1, 1996. If the earnings meet the indexed service credit threshold, then the balance needed to make the service full-time can be purchased. Now let's look at the types of service purchase. Public service is any paid service as an employee of the U.S. government, a state government, or political subdivision in the U.S. This includes paid service at a public higher education institution in the U.S., as well as paid service for a covered entity in South Carolina, of which the member opted out of membership. The cost of this service is actuarially neutral. The payment calculation takes into consideration the member's age, years of credited service, current or highest career salary or AFC, and the amount of service being purchased. Each year purchased, however, cannot cost less than 16% of the member's career highest salary. Educational service is any paid service for classroom teaching in grades K through 12. This paid service may be in a public or private school. Its cost is also actuarially neutral, and each year purchase cannot cost less than 16% of the member's career highest salary. Military service is any service performed in the U.S. Army, U.S. Navy, Marine Corps, U.S. Coast Guard, U.S. Select Reserves, U.S. Army National Guard, or Air National Guard. A member may buy up to 6 years of military service unless the discharge from service was classified as dishonorable. Its cost is also actuarially neutral, and each year purchase cannot cost less than 16% of the member's career highest salary. A member may also purchase up to 2 years of employer-approved leave of absence as long as he returned to covered employment within 4 years. Its cost is also actuarially neutral, and each year purchase cannot cost less than 16% of the member's career highest salary. If a member goes out on workers' compensation, he may purchase the unpaid leave while out because of an on-the-job injury while receiving workers' compensation benefits. The cost of this service is the total contributions the member would have made and interest the member would have received based on the earnable compensation at the time of the injury. A member could instead choose to continue to make member contributions while on workers' compensation. This would be arranged with the employer in advance. In such a case, the employer remits the member's payments to PEBA using a supplemental report during the time the member is out. Previously withdrawn service can be reinstated through the Service Purchase Program. This consists of service earned in SCRS or PORS before ending employment and taking a refund of contributions plus earned interest. The purchase cost of this service is the gross amount withdrawn plus any interest the account would have accrued between the refund and the service purchase request. The purchase of withdrawn service may affect an employee's membership class. For example, if a Class 3 member buys withdrawal service earned prior to July 1, 2012, the member would revert to Class 2 membership. Unlike the previous types of service purchase that are tied to an eligible life or job event, non-qualified service is not. A member can buy up to 5 years of non-qualified service as long as they have at least 5 years of earned service. Like some of the previous service types, the cost is actuarially neutral. However, in the case of non-qualified service, each year purchased cannot be less than 35% of the member's career highest salary. Former state ORP participants who are now a member of SCRS or PORS can purchase those years of service. This service is considered earned and the cost is actuarially neutral. Each year purchased cannot be less than 16% of the member's career highest salary. Finally, a member may transfer non-concurrent SCRS service into their active PORS account. Non-concurrent simply means that the transferred service is for a period of time not already covered by a member's PORS service. The cost is 5% of the member's current earnable compensation in PORS for each year transferred. Now let's look at the service purchase process. To begin the service purchase process, members need to submit a request. This can be done easily in Member Access. Alternatively, a member can complete Form 2101, Request for Service Purchase Cost. Additional forms or documents may be required for certain types of service purchases. The specific requirements are available in Member Access or on the back of Form 2101. These generally serve to verify the service a member wishes to buy. All forms and documents must be received by PIBA within 90 days of the request or the request expires. In addition to the previously mentioned documentation, the employer must complete and submit Form 2209, Service Purchase Salary Verification. All regular earnings for the current year are reported on this form, to include not only the member's salary, but also employer-mandated overtime pay, summer school pay, additional course load pay, differentials, stipends, and/or coaching supplements when applicable. A member will receive a member service payment invoice within 30 days of PIBA receiving all required forms and documentation. The invoice is good for 6 months and includes an expiration date. As long as payment is received on or before the expiration date, it is accepted. If it has expired, the member must submit a new request. PIBA keeps all of the verification documents, so a request and updated salary verification should be the only information needed to update the invoice. If an installment payment plan is not set up by the expiration date, the member will receive prorated service for any monies already received, and a new updated request can be submitted to buy the balance of service during the next fiscal year or after. Finally, let's look at service purchase payments. There are several acceptable methods of payment for service purchases, including a lump sum payment in the form of a check or money order, a tax-deferred rollover from another qualified retirement account to include a member's non-Roth SC deferred compensation account, and/or qualified retirement plan. Members can also pay through the Installment Service Purchase Program that offers both pre- and post-tax payment plans. A member may use one of these methods or a combination of them to purchase their invoiced service. For some, the Installment Service Purchase Program is a good option. If this is a consideration, a member may request an installment purchase estimate. Payments are made through payroll deduction over a predetermined amount of time. The payments can be set to be before tax or after tax at the onset. The fiscal year 2021 interest rate charged for this program is 5.25%. The minimum installment period is 6 months, and the maximum is twice the length of the service being purchased. 2 years and 6 months of purchase service, for example, can be financed over a 5-year period. Installments set up with pre-tax payments have more restrictions than the after-tax installment option. The agreement is irrevocable unless the member retires, terminates employment, or provides evidence of an unforeseeable financial emergency as defined by IRS Code 457. Early payoff or additional payments are not permitted. Payments cannot be increased or decreased during the term of the payment plan. Finally, if a hardship does occur, as defined by the IRS Code previously cited, a written explanation must be submitted to PIBA for review. The post-tax installment program is less restrictive. Under this payment plan, members can make additional principal payments, increase the payment amount, or pay off or terminate the installment at any time. Employers who report payroll through the Comptroller General System, SKEES, are required to offer pre-tax installments to their employees. To meet this requirement, the employer must complete and submit the employer resolution on tax-deferred payroll deductions for installment service purchase, or Form 3228. Once the form is submitted, PEBA sends the file to SKEES to initiate and terminate payroll deductions. Employers who do not report payroll through the Comptroller General System are responsible for withholding payroll deductions. To participate in the pre-tax installment program, the employer resolution on tax-deferred payroll deductions for installment service purchase, or Form 3228, must be on file with PEBA. You should not include the installment payments with your regular, monthly, or quarterly deposits. To report payroll installment deductions, the employer creates an installment service purchase remittance, or Form 3229, through the installment accounting option in EES. When completing this operation, first enter the actual payday date, then select Next. After reviewing the information and making updates, if necessary, select Calculate. Finally, select Create PDF. The alternative method is to manually complete the installment service purchase remittance paper form, Form 3229. The form and the payment are due no later than 5 calendar days from each payday. Payments can be sent via wire or ACH transfer, ACH debit, or by submitting a paper check. The remittance form can be sent by email to serviceaccounting@peba.sc.gov for wire, ACH transfer, or ACH debit. If paying by check, include Form 3229 with your payment. Please note that this process is not applicable to employers using SKEES. When the installment purchase nears maturity, it will be highlighted in yellow on Installment Service Purchase Remittance in EES. Form 3313 will be sent to notify you of the final payment amount and the due date. When the last payment is received, you will be sent Form 3315. There should be no more deductions or payments made after Form 3315 is received. If you deduct payment from a member after the installment purchase is paid in full, a refund is sent. For pre-tax installments, PEBA sends the refund to the employer. For post-tax installments, PEBA sends the refund directly to the member.